Chapter 2. Financial and Accounting Systems Introduction. Financial accounting system. Integral part of any business and acts as backbone for it. It includes other forms of business management like HR, inventory, customer relationship management, etc. Requirement from FAS is different for different person and it should fulfill needs of all users. Simultaneously, accountants' view, BS and P&L must be prepared easily with much effort and time. Auditors' view, BS and P&L must be correct at any point of time, i.e. as per as, and gives true and fair view. Business manager, owner's view, right info at right time for right decision-making. Types of data, database administrator, DBA, can store the data. 1. Master data. Relatively permanent data that is not expected to change frequently, i.e. can change but not frequently. Created by database administrator. Not typed by the user, rather than selected from the available list of masters. Black small square to maintain standardization, as we need to collect all the data at one place for reporting, and black small square to avoid confusion while preparing reports. E.g., same ledger may be written differently. 1. Accounting master data includes ledgers, groups, voucher types, opening balance, B. F. 2. Inventory master data includes stock items, stock groups, inventory voucher types. Just like physical go down, details of stock are maintained in computer for easy search. 3. Payroll master data, system of calculating salary and recording employee-related details. Includes name of employee, group of employees, salary heads like basic pay, HRA, allowances, etc. 4. Statutory master data, date related to statute, law. Different for different taxes. No control on this data as statutory changes are made by government. Examples: black small square. Different types of TDS, TCS, GST and their rates. 2. Non-master data. Data which changes frequently. Generally entered by user but sometimes can be selected from drop-down list like GRN. Examples: amount recorded in ledger, voucher number, date of entry, age and way voucher. Documentary evidence of transaction. Before recording any transaction in the accounting system, it must be supported by documentary proof. In computer language, voucher is a place where transaction is recorded. It is a master date. Different transactions equals different vouchers. Black small square example. Receipt given to a customer after making payment by him, her is documentary evidence of amount received. Voucher number. Unique identity of any voucher. May be used to search for any voucher. It is a non-master data. Black small square. Features, peculiarities. A voucher number must be unique. B. Each voucher type shall have separate unique numbering series. C. Recorded in chronological order. D. Numbered serially. E. May have separate suffix and prefix, sale 001, K, K, C. Voucher type module. Accounting 1 contra. 4. Recording of 4 types of transactions as under: cash deposit in bank, cash withdrawal from bank, cash transfer from one location to another, fund transfer from our one bank account to our own another bank account. 2. Payment. For recording of all types of payments by any mode, cash, bank. 3. Receipt. For recording of all types of receipts by any mode, cash, bank. 4. Journal. For recording of all non-cash, bank transactions, e.g., depreciation, provision, discount given, received, purchase, sale of fixed assets on credit, write-off, etc. 5. Sales, for recording all types of trading. Sales by any mode, cash, bank, credit. 6. Purchase, for recording all types of trading, purchase by any mode, cash, bank, credit. 7. Credit note, for making changes, corrections in already recorded sales, purchase transactions. 8. Debit note, for making changes, corrections in already recorded sales, purchase transactions. 9. Memorandum, for recording of transaction which will be in the system but will not affect the trial balance. In other words, memorandum vouchers are used to record suspense payments, receipt, sales, purchase, etc. Module Inventory 10. Purchase order, for recording of a purchase order raised on a vendor. 11. Sales order, for recording of a sales order received from a customer. 12. Stock journal, for recording of physical movement of stock from one location to another. 13. Physical stock, for making corrections in stock after physical counting. 14. Delivery note, for recording of physical delivery of goods sold to a customer. 15. Receipt note, for recording of physical receipt of goods purchased from a vendor. Module Payroll. 16. Attendance, for recording of attendance of employees. 17. Payroll, for recording all employee-related transactions, like salary calculations, ACCOUNTINGFLOW transaction, right pointing arrow voucher entry, right pointing arrow posting, right pointing arrow balancing, right pointing arrow trial balance. P.L. BS from posting steps are mechanical, time-consuming and huge. Efforts are required. In few cases, voucher entry can be automated and performed by S.W. automatically. E.g., interest calculation on monthly basis can be done by S.W. automatically at the end of the month. Fundamentals of accounting. Black small square objective of any accounting S.W. is to generate two primary accounting reports, i.e., P&L and balance sheet. Black small square accounting software does not recognize any ledger as personal, real or nominal. Instead, it recognizes it as an asset, liability, income or expense ledger. Black small square ledgers may be classified in two types only: ledger having debit balance and ledger having credit balance. Black small square every ledger is classified in one of four categories only, i.e., income, expense, asset or liability. Black small square there may be any number of subgroups under these four basic groups: asset right pointing arrow, fixed asset right pointing arrow, P&M, office equipment, motor vehicle. Black small square. Since balance in P.L. account, i.e. net profit or net loss, is reflected in balance sheet, everything in accounting S.W. boils down to balance sheet. Grouping of ledgers is important as it tells software what is nature of the ledger, and where it should be shown at the time of reporting. B. Facilitates better presentation while reporting. Note: S.W. cannot prevent incorrect grouping of ledger. Front-end and back-end. Separate back-end software is used for handling, storage, processing data. It reduces load and increases speed. Front-end, part of the overall software, which actually interacts with user using the software. Domain expertise meant for handling request form users, meant for presenting information in proper format, different colors, etc. User interface should be simple and intuitive, i.e., min-help should be sought by user, can speak in user's language as well as technical language back-end, part of the overall software which does not directly interact with user but interact with front-end only. Domain expertise meant for storing and handling the data, not meant for presentation, and it's not expected also. It processes raw data and no need of user experience, speaks only in technical language not understood by layman. User application software performs many functions such as receiving the inputs from the user, interprets the instructions and performs logical functions so a desired output is achieved. Examples include SAP, Oracle Financials, MFG, Pro, etc. It generally comprises of 3 layers which together form the application, namely an application layer, an operating system layer and a database layer. This is called 3-tier architecture. A application layer receives the inputs from the users and performs certain validations like if the user is authorized to request the transaction. B operating system layer then carries these instructions and processes them using the data stored in the database and returns the results to the application layer. C database layer stores the data in a certain form. Installed app program installed on hard disk of user's computer. Web-based app program installed on CO's web server and accessed through internet connection. Cloud-based app. Many organizations do not install financial app on their own IT infrastructure as it's not their primary area of expertise and cost in terms of complex systems, and dedicated skilled IT team may be prohibitive. They host app on internet and outsource IT function. Common method to achieve this are infrastructure as a service, IaaS, and software as a service, SaaS. Installed app versus cloud-based app. Installed app needs to be installed in each computer one by one. It's time-consuming and difficult to update. User can access software only from the system it's installed. Thus, restricted accessibility. Difficult to use software through mobile. Faster performance as data is picked from local server without internet, physically stored in premises of user or hard disk of user's server computer. Full physical control of the user. More flexible as it is easy to write desktop app using user's hardware like processor, camera, Wi-Fi, etc. Disadvantage. More CapEx and OpEx required. Cloud-based app installed on cloud. Updation and maintenance is responsibility of cloud service provider. Software is available online and can be accessed 24/7 through internet. It is easier to use software through mobile as data is available 24/7. It depends on speed of internet which may fluctuate, thus affecting performance. Data is stored in cloud service provider's server. Ownership of data is defined in SLA, in which rights and responsibility of each party is defined. Data is not in control of user or owner. Hence, there should be backup and disaster recovery plan. Allows flexibility in respect of cap expenditure and OpEx to the user. Non-integrated system. Right pointing arrow system of maintaining data in decentralized way. Each department has its own database separately. 2 major problems. A. Communication gap, and B. Mismatched data, same name written differently by different departments, leading to confusion. Integrated Enterprise Resource Planning, ERP. It is an enterprise-wide integrated information system designed to coordinate all the info system resources and activities needed to complete business process, such as order fulfillment. Covers functions like A, C and finance. Function, manufacturing, supply chain management, HRM, CRM etc. And integrate into one unified database. An ERP must cover at least 2 functions or more. Examples: tally, accounting and inventory, QuickBook, accounting and payroll, multi-modules, SAP, Oracle, MFG Pro, MS Acceptor. ERP is based on centralized, common database. Black small square data from different functions is integrated. Black small square it allows every department to store and retrieve information in real time. Black small square info should be accurate, complete and authentic, reliable and easily accessible. Modular SW database. Black small square enables a business to select the module it needs, mix and match modules from diff. Vendors add new modules or delete existing modules. Black small square add new modules of their own to improve business performance. ERP. Right pointing arrow centralized database. Right pointing arrow multiple SW modules. Definition of ideal ERP may change as per organization. However, generally single centralized DB is used which contain all data for various SW modules. Benefits of ERP. 1. Use of new technology, like client-server tech, cloud computing, mobile computing etc. 2. Information integration, as it automatically updates data BW related functions. 3. Better customer satisfaction. Customer can place order, track order etc. sitting at home. 4. Reduction in lead time, elapsed BW placing of order and receiving it. 5. Reduction in cycle time elapsed BW placement of order and delivery of order. 6. Reduction in quality cost. ERP eliminates duplication, redundancy of process and provide tools for total quality management. 7. Improved flexibility, by making info available across department, automating process which helps it to react to changing environment in a better way. 8. Improved analysis, planning and decision, as it enables use of many decision support systems and what-if scenario. 9. Improved supplier performance. It provides vendor management tools and procurement support tools. Risk and control in ERP environment. 2 major risks arising due to use of centralized common database. All data at one place. Risk. Black small square. All persons in an organization access same set of data on day-to-day basis. Black small square. This poses results in risk of leakage of info or access of info system by unauthorized person, e.g. salesperson checking salary of his friend in production department. Control. Black small square. All users use same data for recording transactions. Black small square. This results in risk of putting incorrect data in the system by unauthorized user, e.g. HR person recording purchase data. Role-based access control. RBAC, role-based security. It is a policy-neutral access control mechanism that allows employees have access rights to access info they need to do their job, and b. prevents them from accessing information that doesn't pertain to them. It is an approach of restricting system access to authorized users on need to know and need to do basis. Advantage. facilitates administration of security in large organization with hundreds of users and thousands of permissions, enables assignment of tasks to users as per their roles and responsibilities. For example, a junior accountant in accounting department is assigned a role of recording basic accounting transactions, and an executive in human resource department is assigned a role of gathering data for salary calculations on monthly basis, etc. 1. Mandatory access control. MAC criteria are defined by the system administrator, strictly enforced by the operating system, and are unable to be altered by end users. Only users or devices with the required information. Security clearance can access protected resources. A central authority regulates access rights based on multiple levels of security. Organizations with varying levels of data classification, like government and military institutions, typically use MAC to classify all end users. 2. Discretionary access control. DAC involves physical or digital measures and is less restrictive than other access control systems, as it offers individuals complete control over the resources they own. The owner of a protected system or resource sets policies defining who can access it. Types of access: create data, alter data, view data, print data, can be allowed or disallowed to various employees for master data, transaction data, and report examples of access that can be allowed and disallowed for various types of personnel. Directors, complete access to all reports, masters, and transactions, but only for viewing. Can't create or alter. CFO, same as director, but in some cases, exceptions, creation or alteration access to masters and transactions may be given. Head of a department, full access to all department-related masters and transactions. No access to non-related masters, transactions and reports. Accountant can make voucher entry and view accounting master data. Can't create masters or access reports. Data entry operator, very limited access should be given. Can't create accounting masters or access reports. ERP implementation, risk and control. ERP implementation is a huge task and requires substantial money, time and patience. In terms of payback or ROI of ERP, depends upon successful implementation and, once implemented, proper usage of ERP. 5 issues in implementation of ERP. Related risks and controls are as follows. People issues, most critical for success or failure of ERP. Risk. ERP implementation will fail if top management does not support, as huge funds are required. There will a change in job profile, i.e., some job will become irrelevant and new jobs will be created. It mainly happens at end of ERP implementation. Management may curtail training to save cost. Due to integration of departments, it becomes complex and employees tend to leave. May not be familiar with internal working of organizational culture control. ERP implementation should start only after top management is fully convinced and assures full support. Proper training with well-documented manual should be provided for smooth transition in job profile. Proper project-based training should be provided by skilled experts. Allocation of employees to task as per their skills and fixing remuneration accordingly. Consultants should be assigned a senior manager, a liaison officer, to help them understand CO's culture process. Issues. Main reason for ERP is to improve, streamline the process and make it more effective and efficient. Risk. Program management. There may be information gap between day-to-day operation. ERP function. Business process re-engineering. BPR is not just change but dramatic change and dramatic improvement in way business is conducted. Control. Bridge the information gap between them so that they are in sync. Requires overhauling of organizational structure, job descriptions, skill development, and training in use of IT. Technological issues. Organization should be abreast of latest technology to survive and thrive. Risk. Software functionality. ERP offers various functions. Implementing all can be disastrous. Technology obsolescence. Due to advent of new technologies evolving rapidly, ERP may get obsolete. Enhancement and upgradation. ERP is not upgraded and kept up to date. Application portfolio management. It focuses on selection of new business application. Control. Organization should install only those functions which are required by it. ERP should be modular, easily updatable and quality. Vendor support. Vendor should be carefully selected and ERP should be fully updated. Application portfolio management. It focuses on selection of new business application. APM ensures proper selection of business application. Also avoids duplication of apps. Other implementation issues explained in subsequent parts. Risk. Lengthy implementation time. It may take between 1 to 4 years depending upon size at organization. Insufficient funding. Budget is allocated without consulting experts, and then work stops due to lack of fund. Data safety. Since there is only one set of data, if it's lost, whole business stops. System failure. Since there is central database, in case of system failure, entire business operations will get adversely affected. Data access leakage and unauthorized access of data. Control. Care should be taken to keep momentum high and enthusiasm alive. Necessary to allocate required funds and also allocate some funds for contingencies. Backup and disaster recovery plan should be maintained. Strict physical and logical access control should be maintained. Allocate alternate hardware and network, internet arrangement. Access rights need to be defined carefully and provided on need to do and need to know basis. Post-implementation issues explained in subsequent parts. Risk. Lifelong commitment. Even after the ERP implementation, there will always be new modules, versions to install, new persons to be trained, new technologies to be embraced, refresher courses to be conducted and so on. Control. This requires a strong level of commitment and consistency by the management and users of the system. Audit of ERP system. Objectives of IS control to ensure CIA confidentiality, integrity and availability of data, restricted access to authorized users, and prevents unauthorized access. Objective of audit and controls do not change in ERP environment. ERP should produce accurate, complete and authentic information on timely basis in computerized environment. Audit accomplished by one combination of controls in ERP system. 2. Controls in environment in which ERP system operates, including OS controls. General controls includes control over IT management, IT infrastructure, security management, and SW acquisition, monitoring and reporting, IT activity, security MGT, and maintenance. Applies to all systems in an organization from mainframe computer to client application. Control deals with individual business process, function or application system. Key questions to be asked by auditor are 1. Does the system process according to GAAP, generally accepted accounting principles, and GARS, generally accepted auditing standards? 2. Does it meet the needs for reporting, whether regulatory or organizational? 3. Does the system protect confidentiality and integrity of information assets? 4. Does it have controls to process only authentic, valid, accurate transactions? 5. Are all system resources protected from unauthorized access and use? 6. Are user privileges based on what is called role-based access? 7. Is there an ERP system administrator with clearly defined responsibilities? 8. Are there adequate audit trails and monitoring of user activities? 9. Are users trained? 10. Do they have complete and current documentation? 11. Is there a problem escalation process? Management control deals with organization policy, procedure and planning. W.R.T. ERP system control. Environmental control, operational control administered through Computer Center, Computer Operations Group and the built-in operating system controls. Auditing aspect ERP systems. 1. Auditing of data. A. Physical security. Ensure physical control over data. B. Access control. Ensure access is given on need to know and need to do basis. 2. Auditing of process. A. Function audit. Includes testing of different modules, functions and features in ERP and testing of overall process of part of process in system and comparing it with actual. B. Input validation. Involves checking of rules for input of data into the system. E.g., cash sale should be recorded on date of sale, not before, not later. Business process modules and their integration with financial and accounting systems. Business process. Set of coordinated activities that are performed to realize a business goal like order fulfillment. How to manage business process. 1. Define the task, steps in the process. 2. Establish performance measures. 3. Describe organization setup to enable standardization and adherence to process throughout organization. Business process flow, number and type of business processes and how the processes are performed would vary across enterprises. It is also impacted by automation. However, most common processes flow a generic life cycle. Accounting flow. 1. Source document. A. Document that captures data from transactions and events. 2. Journal. Transactions are recorded into journals from the source document. 3. Ledger. Entries are posted to the ledger from the journal. 4. Trial balance. Unadjusted trial balance containing totals from all account heads is prepared. 5. Adjustments. Appropriate adjustment entries are passed. 6. Adjusted trial balance. The trial balance is finalized post-adjustments. 7. Closing entries. Appropriate entries are passed to transfer accounts to financial statements. 8. Financial statement. The accounts are organized into the financial statements. ERP. Categories of business process modules. Profit making is objective. Trading business. Buying and selling of goods without modification. Requires accounting. Module. Inventory module. Manufacturing business. Includes all aspects of trading and additional aspects of manufacturing, conversion of raw material finished goods. Requires accounting module. Inventory module. Manufacturing module. Service business. Involves selling of skills, knowledge, Efforts, time. E.g., doctors, architects, chartered accountants, are the professionals into service. Business. There may be other type of business into service, i.e. courier business, security, service, etc. No inventory, so no inventory module. Functional modules of ERP. Financial accounting module, F&A, important and critical module of overall ERP system. It connects with all other modules. Objective is to generate financial statement. Features: a tracking flow of financial data across the org in a controlled manner and integrating all info for effective decision making. B. Creation of org structure. Right pointing arrow defining company codes, functional areas, controls. C. General ledger accounting. Right pointing arrow creation of chart of accounts, account groups, creation of general ledger account. D. Account receivables. Right pointing arrow creation of customer master data and customer related finance attributes like payment terms. E. Account payables. Right pointing arrow creation of vendor master data and vendor related finance attributes like payment terms. F. Asset accounting. Right pointing arrow creation of asset master data. G. Tax configuration and creation and maintenance of house of banks. Controlling module, CO, facilitates coordination, monitoring and optimization of business processes in organization, analyzing actual figures with planned data. It controls cost elements and revenue elements. Features: a cost element accounting provides overview of costs and revenues that occur in an organization. It is basis of cost A, C and enables user to display cost of each element, i.e. material, labor, overhead. B. Cost center accounting provides info on cost incurred W. R. T. Various department, functional areas like marketing, HR, legal etc. C. Activity-based costing facilitates analysis of cross-function cost allocated to various cost centers. D. Product cost accounting analysis of cost incurred to manufacture a product or provision of service. E. Profit center accounting evaluates P&L on individual independent areas of business. F. Profitability accounting reviews info. W. R. T. Codes profit by individual market segment. Sales and distribution module, S&D, organization to support sales and distribution activities of goods and services starting from inquiry to order and ending with delivery. Process pre-sale activities, prospecting of customers, identifying them, fixing appointment, showing demo and submit quotation. Sales order processing, on receipt of PO, so, QTY, rate, description, is recorded in books. Inventory sourcing, ensuring goods are ready and available for delivery. Delivery of material should be as per so. Inventory will reduce on recording of this transaction. Billing, raising of sales invoice against delivery of material to customer. Payment, receipt of payment and recording it against sales invoice. Features: setting up org structure, creation of new company code, sales organization, distribution channels, divisions, maintaining sales office, etc. Assigning org units, assigning individual component created above to each other like company code to company, sales organization to company code, distribution channel to sales organization, etc. Defining pricing component, like sale document, billing, tax-related component, etc. Customer master data. Setting up customer master data records and configuration. Material management module, It manages material required, processed and produced in an org. It handles all kinds of purchase transactions. Popular subcomponent A. Vendor master data B. Consumption-based planning C. Purchasing D. Inventory management accounting process. Production department. Sends purchase requisition. Purchase department. Evaluate request WRT current stock and pending order. If requisition accepted, ask for quotation from approved vendor. Evaluation of quotation. Select best option and place order. Send PO. Receipt of MAT. By store department. Which issues GRN, MRN. Store department issue room to prod department. Recording of purchase invoice by A, C department. Payment to vendor production planning module, PP. It includes software designed especially for production planning and management. Process. Issue of room. From store, multiple steps. Convert into WIP, multiple steps. Convert into FG, stock. Transfer to go down. It collaborates with the following master data. This includes material master, work centers, and bill of materials B. Sales and operation planning, SOP, which provides ability to forecast sales and prod plans. C. Distribution resource planning, allows company to plan demand for distribution center. D. Material requirement planning, MRP, allows company to plan material required for production. E. Capacity planning, which evaluates capacity utilization of plants. F. Production planning, assists in planning the production of goods. G. Product cost planning, evaluates value of material components to determine value of the product. Plant maintenance module, PM. It is a functional module. It handles maintenance of equipment and enable efficient planning of production. This application component provides comprehensive software solution for all maintenance activities that are performed within a company. Objective A. Achieve minimum breakdown and to keep machines in good working condition at minimum cost. B. Keep machines in a condition that they are used at optimum capacity. C. Ensure availability of machines and service required by other sections of factory for performing their functions at optimum capacity. Process 1. Equipment master is a repository of the standard information that one needs related to a specific piece of equipment. 2. Equipment, plant maintenance, provides a variety of reports to help us to review and manage information about our equipment and its maintenance. 3. Plant maintenance, PM, reports are used to review and manage information about preventive maintenance schedules and service types within any maintenance organization. Project System Module, PSM, integrated project management tool used for planning and managing projects and portfolio management. Projects are executed within budget and time. Resources are allocated to project as per requirement. Example: DLF is executing a project of building a mall ERP implementation project. Request: create templates, create project, project planning, budgeting and release. Project implementation, project completion. Quality management module, QM, helps in management of quality in production across processes in an organization. Process A. Quality planning. Planning Production activities to achieve goal of meeting customer requirement in time, within available resources. B. Quality control. Maintenance of proper standard in manufacture of goods, especially by periodic random inspections of the product. It involves checking and monitoring of the process and products with an intention of preventing non-conforming materials from going to the customer. C. Quality assurance. Concentrates on identifying various process, defining objective of each process, establishing procedure standards for getting required result and documenting the procedure to enable everyone to follow the same. D. Quality improvement. Never-ending process as customer needs and expectation keeps changing. Supply chain module, SCM, network of autonomous and semi-autonomous activities that procures room, processes it and transfer it to intermediate goods and then to finished goods and finally delivering it to consumer through distribution channel. It implies that a product reaches from manufacturer to customer through supply. It helps organization to optimize its supply chain and streamline its process. Process. Room. Manufacture, manufacturing, distribution, retailer, customer, consumer. Customer relationship management module, CRM, aims at improving relationship with existing customers, finding new prospective customer, winning back former customer. It helps org to manage relationship with customers and to determine who a high-value customer and documenting their interaction with org. Only large ERP has this module and it does not exchange transaction with other modules as it does not have transactions like purchase, sale. Benefits are improved customer relationship. CRM helps analyses need, issue of customer and provide service to address the issue, feedback. B. Increase customers' revenue. Using data of customer, marketing campaign can be planned in an effective way. Also repeat customer also helps in increasing sales. C. Maximize upselling and cross-selling. CRM allows upselling, i.e., giving premium products that fall in same category to customers. It also allows cross-selling, i.e., selling complementary product based on previous purchase. D. Better internal communication. Within org, as sharing customer data helps different departments to work together. E. Optimize marketing. It helps to plan marketing in a better way as it enables org to understand the customer needs and behavior in a better way. Human resource planning. HRM. It manages human capital of organization. It handles all activities from hiring of employee to evaluating its performance, managing promotions, handling payroll, etc. It exchanges very few details with other modules. Features are maintains employee database. B. Defines leave, holidays, PF, ESI, etc. C. Handles input transaction like attendance, leave, holidays, advance, etc. D. Generate payroll reports. Integration of various modules of ERP. ERP has many modules and all modules are interrelated and interdependent. All modules must work in harmony with other to get desired result. Important points for integration of modules. 1. Master data across modules must be same and shared with all modules. 2. Common transaction data must be shared with other modules where required. 3. Separate voucher types to be used for each module for easy identification of department. Recording it. 4. Figure and transaction flow across department. system should be designed accordingly. E.g., closing stock is reported in trading A, C as well as BS. Reporting system. Presentation of info in proper and meaningful way. E.g., BS, P, L account, CFS. Reporting system. System of regularly reporting on pre-decided aspects. Objective of reporting system: give right info to right people at right time for right decisions making. 2 basic reports: balance sheet and P&L. Used for basic analysis of financial position and financial performance. For decision making by MGT, more reports are required. Hence, we need proper reporting system to serve the purpose. Management Information System, MIS, is a tool for providing accurate, relevant, timely and structured info, data to managers for decision making and tracking progress. It is a tool used by business managers at all levels, i.e. assistant managers to executives, to evaluate their business's daily activities, problems that arise, make decisions and track progress. Large businesses have separate MIS department whose only job is to gather info and create MIS reports. Tech used: simple S, W and spreadsheets, small businesses, to sophisticated one, large ones. Types of MIS depends on number of divisions, departments in an organization. 1. Sales and marketing. Daily, weekly, monthly sales report. 2. Manufacturing and production. Daily, weekly, monthly production report. 3. HR. Daily, weekly, monthly attendance and salary details. 4. Accounting and finance. Daily, weekly, monthly cash report. It automatically collects data from various areas within a business and generates daily report, sent to key member throughout org as prescribed. On-demand daily report allows managers and other users to generate customized MIS report whenever needed. Features of MIS reports: CRITERIONS MIS reports should satisfy to make it useful. Relevant: should contain specific info related to business. Timely: should contain info WRT what is happening now or in recent past. Old data is not required. If needed, can be generated on demand. Accurate: should not contain mistake or wrong info. Info, structured, should be presented in simple manner which is easily understood by MGT. Data analytics: process of analyzing data sets to draw conclusions about the info they contain with aid of specialized system and software. Process: data, information, knowledge, intelligence, decision tech. Tools used for data analysis: 1. Business intelligence. 2. Data mining. 3. Machine learning. 4. OLAP, online analytical processing. 5. Text mining application. Area of data analytics: A. Bank and credit card companies analyzes withdrawal and spending pattern to prevent fraud. B. Healthcare org mine data to evaluate effectiveness of treatment of diseases like AIDS, COVID-19, cancer. C. E-commerce company and marketing senior company use DA to identify website visitors who are more likely to buy a product or service. D. Mobile network operators examine data to forecast how to retain customer. Types of data analytics are quantitative DA, analysis of numerical data with quantifiable variable that can be measured using statistical measures. B. Qualitative DA, analysis of quantitative non-numeric data like picture, video, etc. C. Exploratory DA, aims to find pattern and relationship in data. Akin to detective work. D. Confirmatory. DA. Applies statistical tech to determine whether hypotheses about a data is true or false. Akin to work of judge during a trial. E. Data mining. DA. Involves sorting through large datasets to identify trends, patterns, and relationships. F. Machine learning. Artificial intelligence technique that analyzes data more quickly than conventional analytical model, tech, softwares. G. Predictive analysis. It seeks to predict future events like customer behavior, equipment failure, etc. Big data analytics applies data mining, predictive analytics and machine learning tools to sets of big data that often contain unstructured and semi-structured data. Text mining provides a means of analyzing documents, emails, and other text-based content. Procedure of data analytics. Data collected for analysis. Data from diff source is combined in STD form. Integrated data loaded in analytical system. Fixed data quality problem. Analytical mode is run on dataset. Communicate result generated to business executives for decision-making participants in data analytics process. A. Data analyst. B. Data engineer. C. Data scientist. Builds data analytical model using predictive modeling tools and other software and languages like SQL, Python. Business intelligence tool for data analytics. Technology-driven process for analyzing data and presenting actionable info to help corporate executives and other users to make informed decisions. Tech used. OLAP, data warehouse, Hadoop system, cloud computing, data mining, text mining, predictive analysis, data visualization. SW. Apps can be bought separately from different vendors or as part of unified BT platform. E.g. ClickView, Tableau. Reasons for buy. Ultimately objective of buy, improved timeliness and quality of info which helps users in making informed decisions. It reveals to user a position of firm vis-a-vis competitors. B. Market condition and future trends. C. Change in customer behavior and spending pattern. D. Capabilities of firm. E. What other firms in market are doing. F. Social, regulatory and political environment. Benefits of buy. A. It improves overall performance of company. It helps in accelerating decision-making, optimizing internal business process, increasing operational efficiency, gaining competitive advantage over business rivals. B. Helps identify market leads and spot business problem that needs to be addressed. C. Helps in enhancing customer experience by allowing timely and appropriate response to their problems. Business reporting. Enterprise reporting. Public reporting of financial data by business enterprises or regular provision of info to decision makers within an organization to support them in their work. It involves ETL with data warehouse and one or more reporting tools. What does an organization report? A. Vision, mission, objective and strategy. B. Governance, arrangement and risk management. C. Financial, society and environmental performance. D. Trade-off. B. W. Long-term and short-term strategies. Types of business reporting are financial and regulatory reporting, e.g. annual report. B. Environmental, social and governance reporting. C. Integrate reporting. Importance, reasons of business reporting are allows organizations to present a cohesive explanation of their business and helps them engage with internal and external stakeholders. B. Crucial for stakeholders to assess Organizational performance and make informed decisions. C. Various stakeholder groups are demanding increased ESG information, as well as greater insight into how these factors affect financial performance and valuations. D. High-quality reports also promote better internal decision-making. E. High-quality business reporting is at the heart of strong and sustainable financial markets and economies. XBRL. Extensible business reporting language. It is an XML-based open international standard language for A. Digital business reporting and B. Exchanging business information. It is often termed as barcodes for reporting. It is managed by Global Not-for-Profit Consortium, XBRL International Inc., more than 600 org. It simplifies the way people can prepare, share, use and analyze business data. It is used across the world in more than 50 countries. The change from paper, PDF and HTML-based reports to XBRL ones is a little bit like the change from film photography to digital photography, or from paper maps to digital maps. The new format allows you to do all the things that used to be possible, but also opens up a range of new capabilities like simplifying the way that people can use, share, analyze and add value to the data. XBRL tagging. It is a process by which financial data is tagged, linked with most appropriate element, definition in taxonomy, dictionary of accounting terms, that best represent the data. All XBRL reports use same taxonomy. Numbers tagged with same element are comparable, irrespective of how they are described by those preparing reports. This tagging facilitates a identification, classification of data. B. Interchange of data. B. W. Different IS and different users. C. Comparison between the reports. What does XBRL do? XBRL makes reporting more accurate and more efficient. It allows unique tags to be associated with reported facts, allowing people publishing reports to do so with confidence that the information contained in them can be consumed and analyzed accurately. B. People consuming reports to test them against a set of business and logical rules, to capture and avoid mistakes at their source. C. People using the information to do so in the way that best suits their needs. D. People consuming the information to do so confident that the data provided to them conforms to a set of sophisticated predefined definitions. Users of XBRL. 1. Regulators are financial regulators, e.g. RBI for regulating banks. B. Securities regulator, SEBI, and stock exchanges, which analyze performance and compliance of listed company. C. Business regulators that need to receive and provide corporate data like FS of company to public. mca.gov.in. D. Tax authorities for assessing tax compliance. 2. Government agencies improve government reporting by standardizing the way reports are prepared and shared with other government agencies as well as public. 3. Data providers, like credit rating agencies who use data to create comparisons, rating and other value-added info like ratios of different company to participants. 4. Analyst and investor. Analyst, to understand relative risk and related performance. Investors, to evaluate worth of a company and make decision. T investment. 5. Company who is required to provide business report to regulators. Company who needs to move info in complex group. 6. Accountant, one who prepare XBRL reports. Features of XBRL. A clear definition. It allows creation of reusable and authoritative elements, definitions i.e. taxonomy that best represent financial data. These elements, taxonomies, are developed by regulators, as setters, government agencies etc. B. Testable business rules. It allows creation of business rules that can be logical or mathematical. These rules stop poor quality information from being prepared, shared or used. It flags, highlight questionable info resulting in corrective action or explanation. Provides value-added info like ratios. C. Multilingual support. Allows definitions i.e. taxonomy to be prepared in as many languages as possible. It can also be translated into other languages. D. Strong software support. Supported by wide variety of S.W. large vendor to small vendor. Applicable regulatory and compliance requirements. Organizations' adherence with laws, regulations and guidelines relevant for business. Organizations aspire to ensure that they are aware of relevant laws, rules and regulation and take steps to comply with it. Organizations are using consolidated and harmonized sets of compliance controls so that all necessary compliance are met with unnecessary duplication of efforts and activities. Violation of regulatory compliance leads to punishment like interest, penalty, fee and prosecution. Types of regulatory compliance. General RC applicable to all irrespective of anything, e.g., income tax. Specific RC applicable to specific type of business only. E.g., company law applies to company-only. Regulatory compliance and accounting system. Both are closely connected as RC requires data and AC data comes from AC system. Two approaches. A. Using same software for AC and tax compliance, and B. Using different software for AC and tax compliance. SW is needed for tax compliances as almost all the tax compliance today is through electronic mode only. If separate software is used for accounting and tax compliance, we need to put data in tax compliance software either manually or electronically. There are some pros and cons of both are as follows. Same software for AC and tax compliance. Ease of operation. Less, as it's integrated system. Making changes at one place may affect other aspects also, features and functionality. Less, as this is not an exclusive system for tax compliance. Time and effort less, as this is integrated system. No time required to transfer data to compliance SW. Accuracy more, as no movement of data between different systems, so no error. Cost more, customizing AC system for tax compliance is more costly than purchasing separate tax compliance SW diff software for AC and tax compliance. More, as this is used only for one single purpose, so more specialized. More, as it's exclusive for tax compliance. More, as data needs to be moved from ACSW to tax SW. Less, as there are two separate systems, possibility of mismatch of data is always there. Less, as it's specific SW. It's less complicated and hence less cost.